I'm Mark Draper. Joining me is Stephen Glass, who's a portfolio manager at Hunter Hall. Today we're talking about China. Obviously Australia is very closely tied to China and the success or otherwise of China. And whilst most people would agree that China is going to continue to grow, it would seem quite obvious that it's going to have some speed bumps along the way. So to explain some of those speed bumps, let's talk to Stephen now. What do you see happening from here?
Our main concern with China with regard to the speed bumps mainly relate to the property market and the data that we get from China. The Chinese property market has really boomed over the last few years, well, more than the last few years, over the last, say, 5 or 6 years. So, for instance, over the 4 years between 2005 to 2009, property prices are reported to have tripled. That means they've gone up about 32% per annum for 4 years. Very few assets go up at that rate. Today, we are told that Chinese investments in residential property is about 6% of GDP. That is very similar to what the US was at, just as we went into the housing crisis. So there has been a massive boom in Chinese residential property and commercial property. And we can actually break it down to something that's not just economic speak. We can put it down to rational behaviour by the man on the street. In China, the deposit rates in banks are artificially low. And the residential investment market is very attractive because you don't pay capital gains tax on property. So it makes quite a lot of rational sense for the man on the street to rather put his money into residential property rather than the bank. And that is actually, that is happening, and it's actually being fueled by the shadow banking system in China. So what that means is banks are tightly controlled, but they're able to bypass those controls by creating off-balance sheet structures, which is very similar to what actually happened in the US housing crisis with all the off-balance sheet funding you've probably heard about in the press. So no one really knows the full extent of the credit bubble or the credit that's been extended in order to grow the housing market, but we do know it's grown a lot. And what we also know is whatever numbers they give us, we wouldn't really trust it anyway, and nor would a lot of investors, because it's just not credible. So, for example, the Chinese release inflation figures before the US do, and the Chinese inflation figures are always exactly or close to where they want it to be or where they predict it will be. And I just question, does it seem practically realistic that China, an economy of 1.3 billion people, that's still developing and very varied and a large country, can get up its inflation figures before the US, which has been doing this for decades, and the Chinese figures are always pretty close to where they want it to be? It just doesn't seem very credible to me. And it's no surprise that there's a lot of firms that have paid a lot of money to estimate that kind of data now. People don't trust the data that's released. And if you haven't got the right data, it's like a doctor diagnosing you. If they don't have the right data, they can't cure the disease.
Yeah, that's a good analogy.
Yes.
Stephen, if China does hit a speed bump, what do you think are some of the implications, particularly for Australia and particularly for Australian investors?
Well, they're clearly going to be dramatic. Australia has about 66% of its equity markets in materials and financials. So if China does slow down, the materials sector slows down a lot.
Yeah, the materials like the mining is the mining sector, essentially.
Yeah, BHP, Rio and so on. So that slows down, that's going to have a flow-on effect for our financial sector, and we're talking about 66% of our economy, so it's huge. Now, right now things are great, and we all think that our economy is fantastically balanced, but you know what? So did the Spanish, and so did the Irish in 2005 when their economy was fueled by one sector.
Yeah.
And, you know, when it slows down, I don't know the exact date it will happen, but when it happens, if you're not prepared, and you don't have your money offshore, it's too late. No one rings a bell to tell you to do it.
No, exactly right.
Yeah.
Which is good reason to have some of your money spread around, particularly with some good quality overseas investments. Which of course is, Hunter Hall offers some very good quality international investments. In fact, the best performing managed fund over the last 15 years, according to Morningstar. If you'd like to know more, check out our website or send us an email at the email address below.